Dear listeners, this is Jason Dex, 24 Forex Secrets, and on the line we have Alex Boyd. Now, are we talking with the real Alex Boyd?
Yes, you are. This is Alex Boyd in the flesh. I am not imaginary.
Fantastic. Now, let's move on to the first question. Is Forex the best way to invest money? Is Forex the best way to invest funds if someone wants to get some profits or get some money?
That's a great question. So, as far as whether this is the best, I mean, there is no best. What matters most is, does it fit within your overall strategy of investing? Do you have the time to put into learning it? For example, if you're an experienced stock trader and you've been doing it for 5 years and you want to add forex to your portfolio, then I wouldn't really say it's the best. What it does, it has one of the highest leverage in all of investments. That doesn't mean it's the best. It could work both ways, right? So leverage can cause you to lose money as well as make it. So for that reason, it's one of the most active. It's certainly very appealing. It's my market of choice because I'm very passionate about global markets, about FX. I've worked in the industry. So no, not the best, but it's certainly there is no best. It just depends what works most for you. And yeah, it does have one of the highest available leverages. So it is one of the riskiest and highest potential.
Okay, I understand it's risky, and I think everyone knows about it. But I think this also comes with every risk comes a fair amount of reward if you are careful about this. And when you were talking, when you were answering this question, I heard you mention if someone is ready to put in the time. What do you mean by dedication and time? And the main reason I'm asking this is I actually want to know how much time is enough for people to learn Forex to be able to get into the market.
Well, that definitely depends, right? So when I started to learn to trade, it took me, very many months. I studied a lot. I traded on a demo for a long time. I traded with small lot sizes for a while. And when I started working for FXCM, that's when it really kicked in, right? So when I really got the knowledge I needed to be consistently profitable. But it depends on mainly, I would say, one thing, right? If you are in the industry, in an environment among other traders, you're learning. And when I say this, I mean real traders, not like people on forums on the internet. If you're in that kind of environment, it'll accelerate the learning curve. If you're just by yourself, trying to do it on your own, a long time, right? It can take a while. And learning the market mechanics can come quickly. But it's different to be able to kind of know what you're doing, be used to it, and then further to be consistent with it. So, yeah, I would say you can definitely understand how the market works, the basic mechanics within a couple of months. And then in the next couple of months after that, you can start to build a strategy within about, a year. If you're dedicated, you could probably get to some level of consistency. Within the next 2 to 5 years, you can look to achieve mastery.
Okay, this is a question actually directed personally to you. When you started Forex, for how long did you, Alex Boyd, for how long did you trade demo before you went on to trade real money?
Well, actually, before I traded real money at all, I mean, I still traded some strategies at demo accounts just to test them out. But before I traded at all, several months, I don't actually remember exactly, it was a while ago. But yeah, I'd say about several months or so.
Okay, so several months would mean 8 months, 9 months, or less.
Something like that. I actually don't remember.
Okay, now we move on to the next question, which is quite important. And for considering I've traded demo for some time, and I want to move on to forex broker, start trading real with a good forex broker, or considering I'm a beginner now, and I know there are lots of beginners out there. What should everyone look out for when they are going to choose a forex broker? What makes a good forex broker?
Um, it really depends on kind of how much you want to invest. So as far as where I'm trading, what I look for in a forex broker is, aside from just the cost and the trading costs, that kind of thing, I look for any kind of value add they have. And I also look for financial strength, right? So we've seen in the recent events with the Swiss franc that a lot of smaller brokers are completely wiped out, which means that your deposit's probably not accessible. So I think the first and foremost thing is to trade with a broker who is going to be around tomorrow, which means, a big name, first of all, but someone ideally, like Citi, like FXCM, Awanda, Gain Capital, just on a big level, someone who's been around, is going to stay around, and has the financial strength to withstand any kind of big black swan event. So that's number one. The second is the execution, right? So if you were a large broker, you probably had access to better liquidity through your prime brokers, through your relationships in the market. And you don't need to hold, the trades that from your clients in-house. So it's not necessarily true that every broker who holds client trades in-house, who operates a dealing desk, is somehow worse. In fact, Gain Capital was better off after the Swiss franc event than FXCM was. And Gain Capital uses a dealing desk, whereas FXCM usually does not. But what you want to look for there is, someone with really no liquidity relationships, and whose sales reps can't tell you exactly how much liquidity you're going to find on average at a certain price level. And that's a red flag. I mean, can you fill larger trades with a small broker like that? It's a big question. If you're trading small lots, then it doesn't really matter too much. The last thing I would say after size and execution capability is, value add, right? If you call in, are you going to get an automated service, have to go through 5 prompts to get someone who doesn't know what they're talking about? When I call CitiFX, there's no automated prompt. It's one number, and Kevin picks up every time. So, that's the main thing that just lets me know I'm working with someone who knows what the hell they're doing, who I can trust. So those are, I would say, the 3 things for me.
Okay, those are really great points. And I also wanted to ask, do you actually care if a broker is through ECN STP? Does this make any difference?
I don't think really anyone on the internet in forex knows what those terms actually mean. So I'll go ahead and explain them.
Okay.
Straight-through processing means that when you put a trade in the platform, it goes to their execution engine without any intervention from the brokerage firm itself. And ECN is probably not applicable to retail traders at all. And ECN is a network where, like a marketplace, where traders can trade against each other, right, and with each other. So if I go on to, Thomson Reuters platform, I can trade directly with other market participants. Whereas with most brokers who are like no dealing desk, straight through processing, that means that they will connect you with someone else, but they are holding the trade for a little amount of time. So those are different terms, and there is no true ECN. I mean, it's one or the other. There is no true or fake. It's like, are they false advertising and saying there's something and they're not, or what is the execution model exactly? So what to look for is what happens to your trade when you click buy. Is it matched on their engine? Does it go to the broker first and then maybe offset? Does it never get offset with someone else? Those are the questions we need to ask. And I don't think it really matters too much as long as your brokerage firm is not going to screw with your prices. And, what would cause someone to not screw with your prices? Well, a heavily regulated broker. For example, someone in the US does not have the ability to do that. There's oversight. There's NFA audits that look into execution practices. Australia, Japan are other good jurisdictions to trade with. But, someone regulated in a very small country or no regulation at all, for example, Mauritius, Malta, the Cayman Islands, there's nothing to stop a brokerage firm from just telling you there's something and doing something completely different with your trade. So I hope that's a good answer to your question, but number one, I don't
Yes,
think
it is. And I'm interested in if you have more to say about these brokers, because this is actually getting really, really interesting. The reason I asked that question actually is because when I visit some websites of some brokers online, I realize that most of them use this word. We are a true, real ECN STP broker. So I was wondering, so who, if you are the real true ECN broker, who are the fake ECN brokers and who are the fake STP brokers? That's why I asked this question. But then you've answered it, and I'm really happy, and I'm sure the readers will also be as well happy with this answer. And considering I've chosen a broker now, let's say I've moved from demo, I've found a good broker, and I've checked their background, and I think they are good. What do you think would be for for the beginners? What do you think would be the best strategy? 90% or so if not more, lose their money when they start to trade real. And the question is, what is the best strategy, or what have you come to learn is the best way to make consistent amounts of profits when trading real money with minimal risks?
Well, there's definitely not just one good way to do it. The only thing I can speak to is the way that I trade, which is contrarian sentiment trading. It's a pretty simple strategy. You pretty much look at what retail is doing and do the opposite. Um, and I would actually disagree. I would think that in terms of the number of people who are profitable, that differs. There is some facts on this, right? So on a quarter to quarter basis, you can see that about 30 to 35% of traders will make money. That's on a quarter to quarter basis. So in a given quarter, that's the percentage of accounts who are profitable. But if you mean consistent, then there's really no data on this, because all I can tell you is what I saw from what I was doing at FXCM. Right, I was the broker and account manager for hundreds. I spoke with thousands of traders who had their accounts. I monitored their balances, helped them out with the platform, with trading, everything. I could count on one hand the number of people who had consistently made money. And that's, closer to 98, 99% or something. So, I would say when you get started, do what I did. Just trade very small lot sizes. It doesn't really matter what strategy you do as long as you're consistent. You can trade with fundamentals as long as you understand the economics. You can trade with technicals as long as you're consistent in the strategy you use. You can trade with sentiment as long as you know what you're doing. So it just matters that you keep your leverage low. I think this is a different question you have, but I would say leverage of no leverage, or 2 or 3 to 1 at first.
But I'm thinking, Alex, I'm thinking the leverage will depend on the amount of deposits, initial deposit you made, and also the lots, the kind of lots you trade will also depend on the initial deposit you made. So let's base our facts and answers and questions actually on, say, someone deposits 10,000 USD. What would be for you a small lot? Because you mentioned that it's advisable to trade small lots in the beginning. If I'm starting with 10,000 USD, how many lots should I be looking at per trade?
Well, yeah, this depends on whether you're testing a new strategy or whether you are actually making an investment. So there's 2 different types of ways you can do this. For example, let's say that 10K is part of an overall portfolio and you want to put, $10,000 into a different currency as an investment. That's different than trying out a new strategy, right? So for that, you would just do whatever fits in your portfolio. Let's say I have 90K in stocks, 20K in bonds, and I want to put 10K in the Japanese yen. I would go ahead and put, a mini lot, a 10K lot on the dollar yen. But on the other hand, if I'm actually testing out a new strategy that I want to trade just for FX and it's not part of an overall portfolio, I would trade micro lots until I know what I'm doing. Once I know what I'm doing and I have the track record and it's I have history with it, then I'll look to use leverage. That depends on the strategy. If I'm doing medium-term trading, probably no more than 5 to 1 leverage, no more than 5 at a time total. So if I'm trading 5 currency pairs, each one would be a mini lot. If I'm doing really shorter-term trading, maybe 10 to 1. But even that is pushing it. So I would say somewhere in that range is going to be the best thing to do.
5 for me actually is a lot, because personally I trade only 2 currency pairs, and I make sure I don't open more than 2 orders at a time. Before I open an order, I make sure the total number of running order is 2 or less before I would open another order. So I think this is also one of the tips that I would add for those who are interested, to not open more than, to set a limit to the amount of orders they can open at a time. We are on a real account now with say 10,000 USD. I've realized one thing: lots of people who start to trade the forex market actually rely a lot on technical analysis. Now, can you tell me if it's possible to make sustainable profits only keeping our attention on technical analysis?
Yeah, it's definitely possible. I personally don't really use technical analysis. I do sentiment trading, but there are plenty of people who do. I think the main thing here to watch out for is, if done right, it definitely is possible. Most people don't use it in the right way. Let's break technical analysis down like this, right? So you have just the price of the currency pair, open, high, low, closed, And then you have mathematical studies based on the price, such as indicators. And what most people do is, because they don't understand the math behind the indicators, they just choose the ones that they like haphazardly and then rely on them, which is redundant and it's not going to get you anywhere. So what I would suggest is use it in this way. Find one indicator to use as a filter, tell you whether you should be looking for longs, shorts, or nothing, and then a different indicator to use as a trigger to actually get you in and out of the market. Now, the classical use of this is to choose some kind of trending indicator like a moving average as a filter. Should I be looking for longs or shorts? And then to use something like an oscillator or a Bollinger Band as a short-term indicator to give you a trigger as to get in and out. So you can see that if you use the MACD and the moving average and the Ichimoku and all this, you're just getting redundant because you may not understand the math behind the indicators. But what I would say is, if you want to use something, go look at the actual mathematical composition of how this indicator is created, and then make sure if you add something else that you're not just laying on the same math on top of it.
I actually think this is going to be a big problem for most beginner traders, because I've personally not actually gone into details to check more than 3 indicators to see how they work. Though I try to read the theoretical knowledge behind it, I actually think going into details to look at how the indicators make their calculations will be a big burden for most traders actually.
Yeah, definitely think so.
But then I think if they actually mean to trade forex and they want to make money of it, I think it's worth actually checking these things to see how these indicators work from the inside.